We have a lot to talk about today. The Ethereum Shanghai upgrade just officially went live. Yesterday, we had US CPI data, which came in slightly lower than expectations and is likely to affect the market. We're going to talk about that. And of course, we're also going to talk about China, because right now we have the Hong Kong Web3 Festival taking place, which is home to a lot of massive speakers. So I want to discuss the potential impact of that conference and what announcements could come out of that conference, because basically every big project in crypto is there. So it's going to be a jam-packed show. Make sure you smash the like button if you're excited. As I said, we have a lot to discuss right now. So the first thing that just happened is the Ethereum Shanghai upgrade officially went live. So it was a success, and now withdrawals are now live on the Ethereum Beacon chain. This is something I want to talk about more in depth towards the end of the video, but I just wanted to quickly mention that it went live literally 15 minutes ago. So that is big news for the Ethereum network, and big news for obviously liquid staking protocols. I mean, the TLDR really on the ETH Shanghai upgrade is this officially marks the completion of proof of stake. So the merge was the very first upgrade which got the Ethereum proof of stake ball rolling. The Shanghai upgrade now completes that process and allows them to look forward to their next update, which is the Ethereum 𝗵𝗆𝗄 upgrade, which is set to reduce the cost of transacting on layer 2. So that's the next exciting thing to look forward to. But now we can finally close the door on the Ethereum proof of stake transition, now that the Shanghai upgrade is officially live. Let's talk about what happened last night, though, before we get into Shanghai and Asia and all that sort of fun stuff, because last night is just as, if not more important. So essentially what we had was the announcement of the CPI data. The CPI data is an indication of the direction that inflation is heading in the US. Being, synergistic with the S&P and the NASDAQ, and therefore crypto is a big driver behind the markets. And even though the US dollar has been waning as still the world's official reserve currency, what happens in the US is big news for the global macro economy. So we did have a 5% CPI inflation reading, coming in 0.2% lower than the forecasted 5.2%. Now, the 5.2% figure referenced here is the prediction from the funds. A lot of the banks were actually predicting a 5.1%. Nonetheless, it came in slightly lower year on year. Month on month came in the same as expectations, so there was no real change there in terms of the core reading. So although the headline inflation was down, the core inflation was in line with expectations. So 𝗟𝗲𝗿𝗆𝗄 said overall US CPI moved down to 5% in March, the 9th consecutive decline in the year-on-year rate of inflation and the lowest level since May 2021. If we actually look at the previous CPI readings, we can see that inflation has been coming down. And for crypto and just for the economy in general, this is a good thing. The reason the Fed has been raising rates is obviously to stop the inflation problem. We know inflation has a lot of negative downstream consequences and effects on the economy. And we also know that crypto and stocks thrive in lower interest rate environments. So when the Fed really needs to be aggressive and hike rates in order to curb inflation, typically that is a bad thing for risk assets. That's why we had a pretty strong and aggressive sell-off, a pretty strong bear market, although we've seen a nice recovery. We're obviously getting a recovery because the likelihood of the Fed pivoting is now higher now that the inflation reading is starting to come down. So 5% was a monumental drop. Whatever way you want to twist this is a huge drop. It's a 1% drop in 1 month. If this trend starts to continue, I think you're going to see a very different Federal Reserve when it comes to these meetings, and I think rate cuts become a real possibility in the near future. And we kind of had to hold our horses in terms of coming out and exclaiming that too quickly, because we still wanted some more CPI data to make sure the trend was down, considering the Feb to March data was only a slight decrease. Now we are seeing a 9th consecutive decrease, probably the biggest decrease as well over the last year. So that was really good news. The market, however, did already kind of price this in. So Bitcoin had already run up in anticipation of the CPI. The market had anticipated a 5.1 to a 5.2% CPI, and that is largely why the price on CPI is flat. So it started at 30K, it pumped, and then it dipped when CPI data went live, because the market had likely priced it in beforehand. But it is the reason, or one of the reasons, why Bitcoin has been running up in price prior to the CPI. We actually saw the energy prices drop year on year very steeply, so -6%. Interestingly, we saw other categories like food items and like other types of goods and services increase. So this is actually quite interesting, because, if you're in America right now and you go to the supermarket, you're probably noticing your weekly shops are going up and up and up in price. This is because a lot of the non energy goods, although energy has a flow-on effect in terms of the pricing of goods, because when you deliver carrots to a supermarket, you need to power that with fuel, and if energy's high, it costs more just to produce and transport these goods. For example, although that is a factor in general, other types of commodities and other types of items, goods, and services have increased in their price a lot more significantly than energy, which has come down. And oil did come down over the year, although we did see a slight bounce in the oil price when Saudi Arabia announced its production cuts, as well as the OPEC production cuts as well. So interesting to note here that energy is a core contributor for why inflation is going down. And similarly, energy was a core contributor for why inflation was rising so rapidly. So that was just an interesting thing I wanted to point out as to how the data is comprised. 𝗏𝗃, very smart guy, by the way, I recommend you follow him on Twitter, said, if the Fed fund rate is still at 5%, and I suspect they still have a desire for another rate hike in them, their real rate is going to be running at 2% in less than 3 months' time. And I don't see how they'll be able to justify that, especially if the data is confirming today's gloomy portents and gold with real positive FENS rates. I'm bugging you. So we can actually look forward to contextualize this in terms of the target Fed rate in the target rate probabilities for the next meeting. Next FOMC is in a month's time. I think it's on, May 3rd. So roughly 3 weeks, actually, we get the next official rate hike. Now, CPI data was the first set of data that we needed to try and quantify how severely the Fed would hike or not hike rates. We can see that there's now a 65% probability that we do get a 25 basis point rate hike. 34% that we only get a 0% rate hike. So the market is pricing in the probability of a 25% rate hike. The market is also pricing in a slight chance, albeit a smaller chance, that they don't hike rates at all. I think we do get one more rate hike until we get a pause. When we get a pause, then we can start looking at the probability of rate cuts. So right now, the market, in terms of its pricing, is pricing in a first rate cut at the end of July. So that is what the market's currently telling us, that we are going to start seeing rate cuts in July. The next meeting, probably a hike, then a pause. So May probably we'll see a hike. I mean, I'm just going with probabilities here. I'm not making any crazy predictions. We'll probably see a hike in May. Then in June, we'll see a pause. And then in July, we'll see our first cut. That is generally what we're seeing here. Now, a lot can happen between now and then. It's just important to really consider how the market is pricing these things in, because Bitcoin and the stock markets and basically all other risk assets are forward-looking. Markets are forward-looking. They're not backwards-looking. So this means that they're always anticipating probabilities. So even if the Fed does cut in July, now that won't be such a shock. It will more so, I mean, the price would probably stay the same, right? Because the market's already predicting it. If you see, a more aggressive cut or a rate pause instead of a cut, or a more severe rate hike, then that starts to reprice the price of assets, because assets move based on the forward anticipation of where markets could head. So in general, a good inflation reading. I guess the major caveat was the market already expected that, which is the major reason why Bitcoin didn't really move much, or stocks either. And I saw a comment here from Charlie that all oil prices go up, inflation is back on. I mean, possibly, but we also don't know how oil will necessarily relate to the OPEC cuts. Like, in theory, you think, supply cuts means price go up, but they're likely conducting supply cuts because they are anticipating lower demand. So if they're anticipating lower demand for oil, then theoretically they should hit an equilibrium where the cut of their supply meets the reduced demand, and you create a new equilibrium, which would keep the price relatively stable. So yes, the cuts of the rate of the production of oil, in theory, you think, oil rockets, prices rocket, inflation rockets. It's one scenario if they were just playing like this stupid tactical political game, but I also have the feeling that they're not just playing that game. And although that may be a factor, the major factor is actually they're anticipating reduced demand. And then maybe we don't see inflation purely driven by oil prices rising. I think it's much more complicated than that. I don't think the market's purely driven by oil. Obviously, it is a major contributor behind inflation. When oil was rocketing, price of goods and services went up because the price of production went up. But I don't think it's necessarily the sole indicator that we should be worrying about. So let's take a look at the S&P quickly, and then we'll get into my thoughts in terms of Shanghai and China and all that stuff. So the S&P right now is at a pretty critical level, actually, which is this 4.15 level. You have mid-range support at the 4K level. This is kind of like a psychological level for the S&P. Obviously, the most well-known index, and since the S&P is comprising a lot of different index funds and ETFs across the American market, we can look at the S&P as a general way to track stock market movement. And I think TA on the S&P generally, although people aren't trading solely based on lines, gives us an indicator as to where the momentum is, at least for the S&P. So I would say we're kind of in this range for the S&P, consolidating actually. So if you kind of want to draw this trend line in and make it into like a very loose flag, you'll see you have the range starting to tighten. So we had a massive drop. We pumped, deviated above our horizontal resistance, and then came back down below, and we're kind of forming this range. So for me, the S&P doesn't look bad because although we did have one lower low, most of these have been in an upwards pattern, but we have been condensing into a smaller and smaller range. So I think you can expect a retest of the S&P. If we're just looking at it on face value in terms of how ranges typically trade, I think it's not unrealistic to expect a slight reduction in the S&P, pulling back to the 3,900 level. That's something I definitely think is on the cards. We know that there has been support around the 3,858 level. We could see something like this where we just range sideways. Your invalidation for that theory is actually could happen quite soon, and that is a break above and a hold above the 4,150 level. We did have one deviation above, but we only had one weekly close, and then we went straight back down below. The stock market moves slow, so a weekly close is not as long in like price terms as it is for Bitcoin. So I would look for another two consecutive weekly closes, retest above this level. Then we can start looking at upper price targets of getting back to the 4,500 zone. I don't know if that'll happen though. We are into resistance. We did make a lower high, so you can see a few lower highs now starting to be made. Indicates to me, just based on gut feel, that we could head back to the 3,900 zone. That's not a doomsday thing. That's like really a small pullback, but that's kind of what I'm seeing. Maybe like a 5% move, but that's really just, we can't predict exactly because TA on the S&P is dubious, but it just gives us an indication as to where we currently sit. So if we do get that pullback, maybe Bitcoin also pulls back a bit. The kind of major level Bitcoin needs to hold right now is the 29K level. I think if we have a bullish retest of 29K, I'm interested in becoming a buyer because that is kind of your last level of major support for Bitcoin. And that would be a 2-3% drop. So it'd be interesting if the S&P does drop, whether Bitcoin holds or whether it breaks below and then comes and tests the previous range at 27.7. On a more macro point of view for Bitcoin, the major level, and if we really zoom out, that I want to see hold is this 24.5 level. So it's this previous range that we made. Remember when we were just testing this 25K level over and over and over again? It was the consolidation below this range that I think is going to be that next critical level of support for like our general structure. So like if you're being really bearish and you think we're going to get a huge pullback, then that is your next probably buy zone that you want to target. And then obviously, you got invalidation below. Most of us though did get good entries on this breakout and we're accumulating mid-range. Anyone that's accumulated mid-range right now is in heavy profits, and considering we're approaching resistance, you may want to consider taking those profits. We know the 32K range is still significant resistance for Bitcoin. Now, in terms of what I think personally, because I just laid out what the support levels are, I don't necessarily think we come down and test straight away. CPI was positive. The outlook for rate cuts is good. Market momentum strong. So I think if you do see a Bitcoin drop, we may see that Ethereum dominance start to increase. And to be honest, all I want as a trader is a consolidation for Bitcoin. Bitcoin consolidates it becomes a lot easier to start to trade altcoins. When you have this continuous dominance pump to the upside, which is what we've seen, it makes it very hard to trade alts. In fact, like, you're much better off in Bitcoin from a pure like risk perspective than, you know, trying to take a bit of extra risk in altcoins for higher returns when you're not even getting higher returns. So Bitcoin here actually rejected on the weekly off the top of our range here. We actually do have July highs for the dominance. That this is probably the level that dominance needs to clear to push up to that really key. Sorry, I just drew a terrible line to push up to that super key 54% level. So if you have a breakout or retest here, I think dominance is going to 54%, but this is like the last level that dominance needs to get rejected at. And so far, it has been rejected here. So it's not complete lights out for dominance right now. In fact, we are approaching resistance, and typically, and we don't know if this time will be different, but typically what we have seen over the last few times dominance has tested this 48 to 49% range, we have seen a rejection. So very clear rejections all the way from July 2021. We've seen rejections in this zone. So I'm hoping this is another one, because that would be good for alts. But it may not happen. We may get a breakout. We'll just trade accordingly, right? If dominance starts to really reject here, and ETH BTC flips back above our key zone, which is the 6.5 level, and I'll go onto the 4-hourly chart to make that more obvious, this level here, then that would be good for altcoins. So we can see this level. I'll actually go onto the daily to make it easy to see the zone here. So we did get a bounce off this lower level of support, but it's not a range we want to be in, this range, because, you know, if ETH starts to break down here, then you have lower targets of 5.3. If you start to reclaim above, that's quite good for ETH BTC. Why am I looking at the BTC chart? Well, because I actually believe US dollar charts now are the most irrelevant they've been in a little while. So for altcoins, you probably want to really try and look for confluence on their BTC pairs and not just price, with the exception of a few like very strong narratives, you know, like Chinese coins that we're going to talk about later, like some LSDs, that kind of stuff. You can look at USD pairs, but we also, for most altcoins, want to have confluence with our Bitcoin pairs there. So that's my rough view on Bitcoin. I think a pullback to 29 makes sense. But if we do keep pumping, we're going to hit pretty strong resistance at 32. So for me, personally, and you can do what you want, it's not the time to be longing Bitcoin. But for some of the alts, we could see a rotation. That is really where my focus is right now. So let's get into Ethereum, because Ethereum is going to be the driver of the altcoins. We know that Ethereum leads alts, so the Shanghai upgrade, that's the biggest news for alts. So just quickly before we get into that, if you do want to trade Ethereum or Bitcoin, based on my levels or your levels, however you want to trade it, you can do so on Apex. So if you're using a DEX, and I recommend splitting your trading and incorporating a DEX into your trading strategy, I think Apex is a great place to do it. It's an order book exchange powered by Starkware rollups, so very fast execution and low fees. And they also have a trade to earn program. So the more you trade, the more you can actually earn, claim rewards, and then stake them to earn more rewards. So that's just a cool little incentive for you guys to get kickbacks if you're like a big trader, just to, you know, be able to get something back if you're using a DEX. And yeah, we see our Bitcoin long here is still up 300% from our entry price at 23K. So that's good, still holding that. And yeah, that's basically the update there. They do have a few new pairs. They have 𝗏𝗏𝗏𝗏, Doge. They're launching a lot of new pairs at the moment. They actually do have Lido. We're going to talk about the LSDs later. So this could be a place you can trade Lido as well. So link in the description if you want to trade on Apex, the DEX. And let's get on with the Ethereum Shanghai upgrade news. So this is big news. I'm actually going to refresh in case there's a major update, but cool. The party's over. Indicators are showing that the blockchain's processing withdrawals as expected. They're ending the live blog. So if we look through the live blog, they were covering, Vitalik was there. They were covering the live execution of the Shanghai or 𝗟𝗶𝗄𝗏 upgrade, because it's the Shanghai and the 𝗟𝗶𝗏 upgrade, to allow withdrawals of staked ETH on the Beacon chain. And we also saw Etherscan posted 𝗏𝗏𝗏𝗏 withdrawals have appeared. So they're now processing as expected, which is a good sign. So it was all successful, and it's a pretty monumental moment for ETH, because this is the final boss when it comes to creating a proof of stake network. This was the final necessary upgrade that was needed to make Ethereum proof of stake. The merge was one part. This is the second component. And I think overall, it's great news that it was successful. What we didn't want was some tech failure or a massive withdrawal queue. The Ethereum Foundation obviously has very strong developers, and every upgrade they've pushed so far has been relatively stable. But they do have a tendency to delay things. But look, I don't mind them delaying, even though the merge was like 2 years too late. Well, later than they said they were going to do it. I don't mind them delaying if that means we get, proper code being shipped and no flaws. I don't mind if that's the case at all. So the Ethereum price, let's talk about this. This is the fun part. This is a very good sign, firstly, that we held above our range high and have consolidated above our range high for almost a week, pre-𝗟𝗍𝗫 and now post-𝗟𝗫, because now we're officially in a post-Shanghai upgrade environment, albeit only for an hour. It literally happened like 45 minutes to an hour ago, but we did consolidate. So we did have a dip during that CPI data. So what happened was CPI came out, pumped the market, then we did see a dip, but we are now consolidating above range highs. So that's a good sign for ETH. And ETH BTC, as I showed you earlier, also had a nice reversal. We do want a reclamation of 6.5, but we did get a sign that the bleeding was stopping, and Ethereum started to get a bit of strength post-Shanghai. Bitcoin actually started dropping post-Shanghai. Now, I'm expecting a rotation out of Bitcoin into ETH at some point. If ETH clears the $2,000 mark, that is probably a very strong sign. We can push up to 25 to 2,600. I'm not saying that we will break because we're going to need some sort of catalyst there, but it's definitely our next major level to the upside to watch. In terms of downside, we have pretty strong support at 1,700 or 1,680, which was the previous range high. Then our new breakout of the next range was 1,850, and then we've seen consolidation above here. So things look pretty good for Ethereum. Now, I'm not necessarily a huge trader of ETH. I do a little bit of trading on ETH, but a strong ETH means strong alts. So you want ETH consolidating above its range high for altcoins to perform. And if we do see pumps, even a rejection, and then consolidation below, as we saw in this range, see how we consolidated below our resistance. If a similar thing happens and we start consolidating in this next range, that would be very good for alts. I think alts really start to get speculated on in this range. So if ETH just holds its range high, that is what I want to see for altcoins. Now, there is another question. What happens with the ETH sell pressure? Because this is a question I'm getting asked a lot about, because it was the narrative being perpetuated on Twitter and YouTube that when the Shanghai upgrade went live, that means people can withdraw their ETH and ETH can be dumped onto the market. So that is, I think it's a nothing burger, to be completely honest, and I'll explain why. The withdrawal queue 12 hours ago had one exiting validator. A day prior to that, 0.6% of the total validators had committed to exiting. So let's just run with that thought experiment. Let's say 0.6% of the validators choose to exit. Let's triple that number and go up to 2%, because we know that there'll be validators that exit later and join the queue later. Let's say 2 weeks later, we have 2% of the total validators leaving. Of that 2%, what percentage do you think will be restaking and liquid staking protocols? I don't know. Let's say 0.5%, because some of these guys, they're staking in validators, they're going to want to stake on Rocket Pool because maybe they want to take their ETH and borrow against it to shore up some liquidity. Maybe they want to have more flexibility over where they can direct validated rewards. Maybe they're staking with a pool. Maybe they're a fund that locked and now want to start distributing to their shareholders or stakeholders. Many, many reasons why someone would withdraw from a validator and stake in liquid staking. So that takes the total amount of staked ETH withdrawals down to 1.5% of validators. And these are just arbitrary numbers, by the way, but we're just running a thought experiment. And let's see, of that remaining 1.5%, how many are actually going to choose to sell all their ETH? Because just because you're withdrawing ETH doesn't mean you're going to sell it all. You could be withdrawing to sell 10%. Like, what if I'm a fund and I have $1 million in ETH and I just want to take 100K off the table because I like this other investment, but I want to keep the majority of my ETH position. To do that, you'll still need to unstake your ETH, right? So we may see some validators unstaking to do that. So let's say 50% of the validators are unstaking to sell like a small portion. That gets us down to 0.75%. Of those remaining people, how do we know that considering the likelihood is that they're underwater, that they're going to want to sell that 0.75% supply of staked ETH. We don't. So the total amount of staked ETH is 12%. Even 1% of that of the total Ethereum being staked is like a very, very, very low figure. Actually, there's been maths that 𝗏𝗄𝗃 ran. He's a researcher. He ran the maths and assumed that even if 2% of the validators exited and all of them sold, that we would have a daily issuance in line with what the proof of work issuance was from the miners back pre-merge. So my math suggested it would be more like 0.5% instead of 2%, which would mean it would be a quarter of the issuance pre-merge. So basically, TLDR, it's a nothing burger. It's such a small percentage. And that's not even of the total ETH. I'm not saying 1% of total ETH. I'm saying 1% of staked ETH, which is 12%. So it's like 0.1% of total ETH. It's really not much. And anyway, as of 12 hours ago, the validator queues showed 64 people waiting to join and 1 validator exiting. So I actually think this will be a catalyst for more staking. I think more people are going to stake. Why would more people stake? Well, because now you can actually stake your Ethereum and know that you're going to get it back. Before, we didn't know that we were going to get it back. So people are going to be much more confident in the staking market, in my opinion. So for that reason, I think we see liquid staking perform quite well. And for that reason, I think we also see the total ETH staked ratio increase. That's my thesis. Mark Zeller, who I had on my spaces yesterday, check out that in my on my Twitter profile because he had an amazing explanation of the impact of the Shanghai upgrade. You can see here and listen into that if you want. Mark Zeller is the founder of 𝗧𝗿𝗱𝗏, by the way. Very smart DeFi guy, French guy. Really, really smart guy. He predicts that the total amount of ETH staked will actually double and completely outpace withdrawal activity. So he thinks the Shanghai upgrade will do the opposite. The reason I'm saying this is because the major fear now is, oh my God, ETH Shanghai is going to cause a supply dump. It's not. It's a nothing burger. So if anything, it's bullish for liquid staking. So, all right, let's look at Lido then, and let's look at Rocket Pool, because they're the two major ones. Let's assume it is bullish for liquid staking over a 1-year period. What does that mean? Does that mean we should buy Lido? Does that mean we should buy Rocket Pool? Well, this isn't financial advice, but I'm going to outline my rough thesis as to what I think will happen. And this is just an opinion. This is just, I guess, take it with a grain of salt. This is just my take and my opinion on what will happen. The LSD narrative was very shilled on Twitter. It was very hyped. A lot of people were talking about it. And that resulted in a pretty big price run-up. We have seen a bit of a sell-off, but in general, we see prices across liquid staking protocols 2 to 3x higher than they were at their lows. Most alts have doubled or 3x, so it's not out of line with the market, but they have performed and generally outperformed the market. And you're looking at Lido and Rocket Pool. If you look at Mute and Dusk and the smaller ones, they obviously did 5 to 10x's because they're smaller protocols. So we did see a run-up. There were some people that were just trading this narrative. And when I say some people, I mean retail, that love to buy into the hype of something and then sell once it happens. It's like, buy the rumor, sell the news. People kind of adopt that mindset. So they'll buy all the way up to an event and then they'll dump on the event. That's just typically how the markets trade on these events. So in terms of Lido and Rocket Pool, I think you could see a pullback in the short term, because what's going to happen is the staking activity isn't going to increase straight away. I think it could take 6 months to 1 year for staking activity to really ramp up to the levels Mark's even alluding to. Actually, probably longer, maybe 2 years. So I think people might start to get a little bit impatient and be like, oh, the staking ratio isn't increasing. It's been a week. Let me sell. This is shit. And then they'll sell and exit. But what we'll see likely over time is a real increase in the staking ratios and LSDs. And after you see that sell-off, you may start to see a repricing of these assets based on fundamentals. So for me, these aren't trades anymore. They were great to trade on breakouts, and you can still use TA for good entries, and I would 100% recommend doing that. And you can trade them based on TA if you want. But for me, this isn't a short-term trade anymore. This becomes a slightly longer-term bet on the LSD market increasing over a year. So now that I'm viewing it with more of a 6 month to a 1 year time horizon, I'm no longer looking at breakouts. I'm more so looking at places I can accumulate. So any major level where we get dips, I'm buying LSDs. and I'm just adding them to my bags because I'm bullish on liquid staking long term. And look, I may be wrong here. My thesis may be wrong, but my thesis is that LSDs are a major beneficiary, and now we're seeing a cool off, and this cool off may continue because people are selling. That is a buying opportunity for me because I'm actually bullish long term. Ran isn't. So we had a discussion about this on our research call. He thinks that why would someone stake in a liquid staking protocol? My major argument against his was people will actually want to unstake from ETH validators and restake in liquid staking. And also the fact that ETH validators now can withdraw from the beacon chain, that's an additional incentive for you to stake on liquid staking. Because, you know, if I'm a normal retail person, right, and I want to stake ETH, I'm much more comfortable. This is one of the reasons why I didn't put a lot of ETH into Lido, by the way. And I put some, but not all of my ETH. I'm much more comfortable staking ETH in Lido knowing that I can withdraw my ETH back. Because staked ETH, although technically it should trade at a price and there shouldn't be an arbitrage, although they trade at the same price, you have no hard peg to ensure that staked ETH will be worth an ETH. So you put an ETH into Lido and you get one staked ETH back. What happens if something happens to the peg or there's some mess up with redemptions and then your staked ETH halves? That was a very small chance of happening, like a 0.001% chance, but it was a chance, right? And that chance is something that some of the bigger players just weren't willing to take. So Lido withdraws. The withdrawal queue for Lido is actually a month after the Shanghai upgrade. So that's not happening till May. So the real positive incentive to stake in Lido isn't live now. It's live in a month. So what we could see is like a lag where the price, you know, performs averagely over the next few weeks. And then maybe we even see a dip amongst LSDs. And then after a month, we see quite a strong performance. So in terms of my personal positioning, I'm already in Lido. Now, I know this sounds, I did speak about this on the show. I know this sounds like, you know, bragging, but to be honest, I got a very big entry during FTX under $1. I somehow managed to get the Pico bottom on this date, which is like, you know, pretty flukish, but I did. And that's just the truth of it. And then I also bought much higher. You know, I've also bought at, you know, retests of this zone. I even bought it at retests of this zone, which I'm slightly down on. But overall, I think my average would be around this zone here. Because I bought most heavily here. I bought some up here. It probably bumps my average down to like $1 to $1.50. So for me, I'm in a good position because I'm in profits on my Lido, and same as my rocket pool. I will look to become a bigger accumulator around $2. I also think mid-range is a decent place at 2.3. They're your downwards targets. Obviously, anything in this range would be amazing. And then your upwards targets are, you know, if you get a breakout of this wedge, you can see this orange wedge here. If you get a breakout of this wedge and a retest, then that's actually an easy place for me to add like a low leverage long or a spot long and set my stop loss on that position under the previous wick. In this case, there's a bigger wick, so it'll be under the flag, under this orange line here at 2.35. So that could be a place for me to get stopped out. It'll have to be spot or low leverage due to the volatility of this token. And then look, you know, to rebuy at $2, but keeping a principal position for like a 6-month time frame hold. So let's see if my LSD thesis plays out. I do think out of Lido and Rocket Pool's better. Why do I think Rocket Pool's better? Because I think the tokenomics are better. And I think long-term, the valuable accrual for Rocket Pool is much stronger because if you want to stake in a Rocket Pool validator, you need to stake a Rocket Pool. Lido is not a staking token. It's a governance token that you can stake for governance voting, but you're not really earning anything from the protocol, and you don't need Lido to stake. So in Rocket Pool, if I want to spin up a validator, I need to stake Rocket Pool. In Lido, I don't. I can just stake ETH through the Lido pools, and I don't need any Lido. That's the major difference. So Rocket Pool, from a fundamental perspective, is stronger. And then you've got FRAX, which for me becomes a decent buy at the $7.7 to $8 zone. So we can see it rejected off key resistance. We have now support. I think this could be a decent range trade. If we're patient here and get entries here, we can set our stops below. Probably once again, for me, more of a spot buy because we had massive deviation below, which makes me worried to set a stop at 7.3, but you can if you're a leverage trader. It's all up to you and how much leverage you're using really, and your risk profile, and then looking for these upwards targets at the highs of the range. So that is what I'm looking at for FRAX and Lido. I'm going to elaborate on this thesis in later videos. I just wanted to talk about it a little bit, considering Shanghai is now live. And if you want to do any spot trading of these, because as I said, spot is something I'll be incorporating into my strategy here. You can trade Lido and Rocket Pool and FRAX and all these tokens, as you can see, on KyberSwap. So they've got all of them. FRAX, Rocket Pool, Lido. They've even got the little ones, SSV. If you're looking at the lower caps. I'm playing it. I think I'm playing it safe with the big three, but they've got all of them, right? So if you want to, I don't think that's the right mute, by the way, but yeah, they've got all of them. So if you want to do spot trading, there's a link in the description to KyberSwap, and it'll give you the best rates. So why would you trade on KyberSwap and not just use Uniswap? Well, they're actually going to route. So if you're going from ETH to Lido, it's automatically going to route you through the wrapped stake ETH pools in Balancer, and then it's going to put the rest through the Lido pool in Balancer to get you your Lido at the cheapest price, and it reroutes every 10 seconds to get you the best possible price with the lowest fee. I need to increase my slippage slightly here to 0.1%, and then I can execute this trade with a pretty good return. So we're seeing price impact here is extremely low. KyberSwap is optimized to get your price impact down. That's why it's good to use an aggregator, because essentially it aggregates across different AMMs. So that is how I would position myself spot-wise on a MetaMask. They're all on centralized exchanges as well, if you trade on a centralized exchange. This is Rand's thesis. I want to talk about Rand's thesis and tell you guys if I agree, because I know a lot of you also like his opinion. I'm happy also to hear that I made you thousands on Arbitrum, man. Thanks for the donation as well. I think we did really, really well with ARB, positioning ourselves for the airdrop last October, and then getting really good entries on the ecosystem, like GNS and GMX and all that sort of stuff earlier in the year. And those are now GMX 2x, but gains was up to a 10x at one point. If you've taken profits, you'd be well in the green there. So that was really good. I want to respond to Rand quickly. So he said, ETH Shanghai tomorrow, here's what I'm expecting. Staking withdrawals slower than expected. I agree. I 100% agree, Rand. We even see here that the validator queue is looking very thin, which is good. So yes, I agree. Withdrawals slower than expected. LSD protocols drop as people realize the main reason people use them was for liquid token liquidity. Disagree. So I agree with the dropping part, potentially, but the reason he states for them dropping, because of liquid token liquidity, I disagree with. I think the reason for them to drop will be selling the news. So I don't think they'll drop because of this. I think this is not a real reason. I think the real reason they'll drop is because of a sell the news. But I agree with the fact they could drop, and then we'll just buy lower. They also could pump, and if they do, then we'll just buy in on a confirmation. We don't need to overcomplicate it. FRAX is harder because it's very. I'd prefer to buy here than here for FRAX, unless there's some crazy bullish retest, and then we can look at longing. But I'd rather buy here. And for Rocket Pool, I would rather buy. Let's just look at RPL very quickly. I would rather get an entry, down here at the $40 zone. And then you've got your next zone at 31, which is lower. There's not historical price data due to their listing, so we can't view all the data, which makes it hard to trade. It did break below the diagonal, though, so that's just something to keep in mind. So I disagree, because I don't think the reason people use them was for liquid token liquidity. I think the real driver behind using something like a Rocket Pool is flexibility. Validators, they want the flexibility to be able to route transaction revenue to different stakeholders. And I also think a lot of these guys will want Ethereum to be able to stake it, put it on a money market and borrow against it, because a lot of people are struggling for liquidity in this market. And if you're a huge ETH whale and you've got 1,000 ETH, and you want a little bit of ammo to play with, why not put some in Aave, pay a small premium if you really like something on ZK Sync and you want to invest in it and you're short for liquidity. Let's say your investment funding side's drying up and you have huge ETH holdings. Why not take 20% out of something like an ETH validator and put that 20% into a Lido or a Rocket Pool, and now have liquid ETH that you can earn yield off and borrow against it. So I think those two reasons alone mute this point. And I'm not trying to argue with Ran. I'm just stating my opinion. I think it's a great discussion to have, and I would love to maybe have a discussion with him about this at some point. But I agree with the fact they might drop. So actually, the underlying things I agree with. The ETH run alt season starts is his next prediction. That we see in alt season. This one's freaking hard to call. Like, I wish I could come on stream and tell you I knew that there would be a rotation. I don't know, because dominance is annoying me with how bullish it's been. The only hope I have here is that we did get a rejection at the July 2021 highs, and that means maybe we get a pullback, and that would start to send alts performing well. Also, what else gives me hope is that if we look at Bitcoin on a 4-hourly chart, we've actually seen a bit of weakness starting to kick in. Not much weakness, but a little bit of weakness, a little bit of a sell-off. This could get a bit worse, and maybe we retest 29. Whilst ETH has been strong, we actually had a retest of range highs. And then we're looking to consolidate above range high. Bitcoin already broke out. Could come down and test. So we could see this drop actually just be a Bitcoin rotation into ETH, and that would be your bullish scenario for ETH in the short term. So I don't know long term how this is going to play out. Like, I believe ETH dominance increases significantly long term, but before that happens, Bitcoin can lead the run. That's definitely something that can happen. As traders, we don't need to predict. Predicting's stupid. We just trade price action. So any trading you're doing on altcoins, you don't really need to be some expert and have some elaborate thesis on ETH dominance. You just need to trade based on what you're seeing. If we start to reject on BTC dominance, and if ETH BTC starts to recover, and you've got nice confluence of breakouts on alt BTC pairs, take the longs and don't worry about what happens in 6 months. Our 6-month plan is very different from our trading plan. So the last thing I wanted to talk about, and I'm annoyed this video is 41 minutes long because this is almost a 30-minute conversation in itself, is the China narrative. So let me just quickly explain what this is. So I did a thread on this as well if you want to get the full details. The Hong Kong Web3 Festival is currently taking place. It's ridiculous. Like, I've never seen a lineup of speakers this strong in my life at a crypto conference. Something special is happening in Hong Kong, and I think it's flying under the radar in US circles because we're in a US echo chamber on Twitter. But this is really starting to brew. I'm scrolling through day one here. You've got CZ, you've got the founder of Aave, you've got the founder of, well, not the founder, but a key contributor to Chainlink, etc., president of OKX. We start scrolling through the day 2, which is today, which commences in 2 hours in Asian time. You've got all these speakers speaking. You've got the Aptos co-founder speaking. I can't even scroll through this so much. Founder of Neo, founder of Nia, founder of all these protocols, potentially making big announcements. Asta. It's crazy. And that's just day 2 of 4. We go into day 3 and you have the same thing. You have literally another 50 speakers, all big VCs, all big fund managers and projects. And then the last day also has a very, very stacked lineup. Lots of Asia Pacific specific guests, but also a lot of guests also flying over from Europe and America to join. So this is pretty insane. What does it mean? Well, it means that there's something brewing in Hong Kong and Asia. 10,000 attendees, 300 industry speakers, 100 Web3 projects, makes it double the size of the last Web3 conference in Hong Kong, which only had 5,000 people. So the interest in the Hong Kong market has doubled. CZ actually backs up this interest, saying that he's now anticipating Hong Kong banks to start supporting crypto, and he thinks we'll see more funds starting to move there. USDT alone is at 80 billion market cap, more stable coins to come. So he alludes that we could see inflows into the Hong Kong market. And we did get a very bullish announcement from 𝗏𝗆𝗄, the Hong Kong financial secretary, who announced his support for crypto and support for crypto development. And they recently obviously legalized crypto trading, but also announced a $6.4 million investment into Web3 technology development. So we could see here that he said, in order for Web3 to steady and take the road, we'll adopt a strategy that emphasizes proper regulation and promoting development. They said they'll host the Digital Economy Summit this week, a 2-day event with a focus on analyzing adoption of Web3 tech. So that's happening alongside Web3 Festival. and Hong Kong officials have been laying plans to accelerate the adoption of Web3 via the $6.4 million Hong Kong annual budget. That's not a lot of money, but it's not the money that counts here, in my opinion. It's the pure fact that they are starting to take action. So it's not even the amount of money that matters, because we know Abu Dhabi has a $3 billion program or a $2 billion program. It's just the fact that Hong Kong is now opening the doors. That is a positive sign that in the face of what is pretty strict and uncertain US regulation, we could see an injection of talent from the American market into the Asian market. Now, I'm becoming much more bullish on Asia than I am US in terms of the crypto markets. I think the US for crypto is looking very shaky, at least with the current the current party in power, and unless there was a major shift up in the US in terms of, well, to be honest, between you and I, Gary Gensler being booted out, I don't know if anything's going to change here. So I think what's happening in Hong Kong, at least my theory, is China is, I don't want to say using, but China is going to be looking at what Hong Kong does and monitoring pretty heavily like the policy they're introducing and evaluating the success of that policy. So, are we seeing increased risk amongst investors? Are we seeing investors alike trading crypto? What's working, what isn't? Are exchanges doing proper KYC, etc.? They're going to look at all these factors to see how Hong Kong implements. And then if that is successful, it'll almost be viewed as a trial run to open up more lax policy from China. I have a theory long-term that China will want to, although I know they're launching their own CBDC, etc. My theory long-term is that if the US continues its very negative stance on crypto, China will use that as a potential device to take its own benefit from it. Because I think the US is making a big mistake at the moment because they're not factoring in the potential innovation of multiple existing financial industries, and also the potential for the government, because like they're greedy, like every government is, to make money. The government can make a lot of money off crypto if they tax it properly, regulate it properly, and support it properly. It could really make their financial systems more efficient. A more efficient financial system is also a more productive financial system. So GDP increase obviously is what the US government's looking for. So I think saying no to Web3 is a mistake. If they continue with that path, I think a country like China could potentially open the doors a little bit because they realize, well, there's an opportunity here. We can attract this talent. That's what Abu Dhabi's been doing. That's what Saudi Arabia and these other countries are starting to look at. That's what Singapore as well is looking at. So we could see the three pillars of crypto in a few years become Hong Kong, Singapore, and Dubai. So I think it's also, although like regulation is a major headwind and we're going to have a lot of issues with it over the next few years, Coinbase receiving their Wells notice, Binance receiving a CFTC sanction. There's a lot of shit happening behind the scenes, and there's going to be a lot of pain. On the other side of that could be simply just a power shift from the east to west. The other thing to note is it might not last forever. The US regulatory stance could easily change if someone else gets elected, like DeSantis, and like he's a bit more open to crypto. Things can change literally in the next 2 years, and they can take back a lot of the policy they introduce now. That's also a situation that could occur. And also, for really strict bills to be passed, they're going to need a vote in the Senate, which incorporates both parties and individuals' point of views as well. So it's not just like as black and white as Gensler's going to ban crypto. There's a process when it comes to legislation, and there's also a process that you need to fight in court. There's a system in place in America for a reason that allows companies like Coinbase to actually fight what they view as unfair sanctions. So that is a major development. It's the crypto's biggest headwind at the moment, regulation. I just think it's starting to cause some positive developments in the space on the Hong Kong side. Now, remember, Hong Kong isn't China. Hong Kong is connected to China in many ways, but it isn't China mainland itself. So it doesn't mean China's legalizing crypto. What it means is it opens the door up for easier transfers into crypto from potentially China mainland citizens. And then later on, if it's a successful trial run, maybe China starts to implement some of the stuff Hong Kong's implementing, which would be amazing. Because right now, crypto is like banned completely in China. But it seems like they're just kind of letting Hong Kong do their thing here, which is, it signals to me that there's a shift. It signals to me that there's a huge shift. Now, what's the alpha here? Well, the alpha is there is a shit ton of amazing projects speaking today. Yesterday was the intro day. CZ spoke. Today and tomorrow are the big days in terms of projects. So we could see announcements. So what kind of announcements could we see? Well, you have the likes of Aave, Matic, Link, Aptos, Nia, AVAX, Neo, DYDX, HNT, these kind of projects speaking. Some may start to announce individual project upgrades. Some also may announce, and this is what I think we're going to see a lot of, partnerships with local governments, local initiatives. So this would be quite bullish. I'm very interested to see what projects actually outline plans to target the Asian market. Maybe some of them start opening up headquarters in Hong Kong. Maybe some of them start supporting, sporting events in Hong Kong, or come up with, sponsorship agreements, or maybe some actually partner with Asian specific projects. You might see a Chainlink starting to provide Oracle data to Chinese / Asian related protocols. You may see all of that kind of stuff happening. So we don't know what projects are going to make announcements until they happen. I don't have the pre-alpha for you, but what I do have is a watch list that's on my Twitter. If you go into my Twitter, which is linked in the description, the first tweet should be this thread. I have a watch list, which is an Asian/Chinese coin watch list. So there's a few coins here which I'm watching for, and I just want to make sure this actually, why isn't this loading? Oh, BTC pairs. Get me back to the menu. So, okay, so the Asian Chinese related cryptos, you can import that into your watch list, and then here we go. Thanks, TradingView. And then you can look through the individual projects which have Chinese relations and look for price movement, so you can track them all. Now, look, some of them are dubious in terms of their ties to the Chinese economy at best. Some of them simply just have a Chinese founder or have some sort of base in Hong Kong, or some of them have like loose partnerships with Chinese related coins. So it's more of a narrative play. But if there are any big announcements, these are some of the coins I'd be watching. Filecoin's actually one of them. Interesting right now, we saw the major sell-off of Filecoin post FVM. FVM is now launched, and as far as I'm concerned, it's a success so far. We are getting a retest of the 5.9 level. We have this diagonal support here. If we break, I think another decent place to buy could be 5.1. So just keep your eye on Filecoin, because you do have pretty tight invalidation underneath at 4.5. Yeah, you can't use 20x on a Filecoin long, but you could probably get away with 2 or 3x on Filecoin, because you can set your stop below this level, which is in line with the top of this previous range, and then take a long at the 5.1 level. So that's a level I'm looking at. You can also look to long in this zone on the retest of the diagonal, but that would be a smaller position for me. That would be a smaller position. But Filecoin's interesting. If we do get an announcement here, it could pump. I know Andrew Kang's bullish on Filecoin. He's looking at CFX File, ACH, Cocos, and Arbitrum. I don't know why Arbitrum, but I've already put them all into this list for you. So if you want this list on your computer, it's as simple as just going to my thread, which is linked in the description where my profile is. In fact, Paula, can you just put the thread in the description? I'll send you the actual link to the thread now in the private chat. So I just sent that. She'll put that in the description for you, and you'll have the link, which is on my Twitter, and you can scroll down to the bottom and add that just for your own information. And I would also look at some of the big speakers. So these were some of the major ones, but if you want to find more projects you're interested in trading, you can look through announcements and see if there will be announcements. Someone saying, oh, it's buy the rumor, sell the news. It usually is when it comes to conferences, but here's the difference. Usually it is a project-specific conference. So, if it's an AVAX conference, obviously it's going to be like buy into the conference, sell on the conference, right? This is not like a ecosystem-specific conference. This has so many projects. It would be just unreasonable and almost impossible for there to be liquidity flow into every project that speaks. I think for this reason, it hasn't really impacted price. So we're actually going to see some of these announcements impact price, because there will be things that the market isn't privy to, not anticipating. Like, I don't know, I'm just scrolling through the list. I'm using an arbitrary example. Some random project, let's say Reap. I don't even know what Reap. No, Reap's a card, so you can't buy the token. Look, just anything with the token. Nia protocol, right? They're speaking today. Aptos is also speaking. So let's say, 𝗟𝗍𝗽 comes on, announces some near partnership with China, or Hong Kong rather, and announces some ecosystem fund for Hong Kong development. That's probably going to be reacted to really positively. And we don't know about that. For example, like we don't know that NEAR is going to announce that. It's not a NEAR conference. NEAR hasn't really pumped. So little things like that, I think, are other things to look out for. Big announcements of related protocols. NEAR BTC really does not look good. So this has a lot of leeway to pump if it does, but it just looks terrible right now. So that's just one example. But you've got a million projects. That's just a random example. We also saw BitGet and launching 100 mil into their Web3 fund in Hong Kong. So that's crazy. Like Web3 funding in Hong Kong, as 𝗍𝗍 alluded to in his tweet, we're going to start seeing a massive, well, I'm saying we're going to, we don't know, but a lot of industry players are anticipating a massive shift of funds into the Hong Kong market. Maybe even 𝗍𝗍's working on something. He put a ... here. So he said more stables to come. We know BUSD and Paxos have kind of started to separate their ways because of the sanction. Maybe he launches a token in Hong Kong. Maybe that comes out of this. So that's pretty cool. All right, let's get into stuff. Looking at some questions. Someone said it's crashing. Oh my god. What's crashing? Nothing's crashing. Or Ocean. You saying Ocean's crashing? Open up my fortune cookie, says the market's near. Market's still dumping. This is a market pump, not a dump. I don't know. I'm getting a few comments saying the market's dumping. Sure, Bitcoin pulled back, but your altcoins have performed well. I mean, not well. Like, they haven't pumped. They're down a little bit. But, like, what I mean by well is ETH BTC has started to reverse a bit, which is good. We want that. So, yeah, I think that's not a bad thing at all. And ETH Shanghai just went live. You need the market to start pricing in the impact, right? But I'm looking at ETH now, and I'm seeing consolidation above range high. Yes, I'm seeing a slight pullback, but that would be a good entry. And I actually would like a dump to get an entry, because you can't really buy here into resistance. You do want to buy on a pullback, and that's kind of my thesis with LSDs as well. Sol. Oh, yes. Sol had a huge move. Let's look at Sol. Yeah. Woo. Sol broke out of a trend. I didn't trade this. I could have. I didn't. I don't know. I was lazy, but I've had this trend line for weeks, so I theoretically could have gotten this breakout. But I think anyone that's watched my shows and has this chart as well would have caught this if you weren't lazy like me. I just get lazy with trading sometimes. But yeah, we had our breakout. So yep, played out perfectly. Your TP is 2.7 for Sol. You may want to consider though if you're up, because you'd be up 16%. Take some freaking profits, man. If you 10x leverage that, you're up like almost a 2x, and you do have resistance here into this zone as well. So I'd say this whole zone's resistance, 24 to 26, but especially if this 24.5 level. So I would look at taking some profits into that, and then let's see how Sol performs. It'll probably pull back. It's a weak coin recently, but then your next level to buy would disregard the diagonal, because that trend's kind of done with for now, and you look at something in the $20 zone at the horizontal. You can see here that was like the first major dip we had. We had a bounce, and then we smashed through, and then this was a level that we used to support for quite some time in this wedge formation. So across the 200 AMA, it did on the daily. That's one of my favorite indicators. Very good sign. So yeah, a retest of this level, 200 MA, and the horizontal would be a good line to look at. Sol relevant next cycle or dead? Look, I have a little bit of a bag, but not much. I'm not a huge fan of hodling like endless L1s for the next cycle, because we don't know what'll succeed. I'm willing to take a bet on it just because I think development's strong, and I think it's beaten down a lot in price, so I like it. If we zoom out macro wise, we are in a general accumulation range. So this range can be as low as this zone. We could do something like that. That would be very bearish and everyone would get panicking. Or we could like create a new range, like in this zone and like range there for a while. But in general, we're starting to like hit accumulation levels, I think. Yeah, in this general zone. And if you can buy anywhere here for next cycle, it's not a bad entry. So for me, I don't know if I'm like a huge believer, but I am confident in price wise. So basically, like it's all EV, right? Expected value for me on buying Sol is higher than not, but I'm not like also convinced Sol is the future. I just think it's unique because there's not many other non-EVM chains that actually have fast execution. So a lot of people ask about FTT. Did they announce some sort of? I saw some FTT news. And a lot of buy volume. Let's look at that quick. Let's see what happened because I wasn't privy to it. Is there any news? FTX recovered 7.3 bill. Considers relaunching. Oh, so they're gonna relaunch. Is the what's it called? I forgot what the name of him is. That guy that's managing it. Is he relaunching it? Oh my god. Real Vision. Considering a relaunch in Q2. Oh, the former sales chief said they should relaunch. Does that mean they are relaunching or just like they should? We don't know if they will, right? He said they should relaunch. The block. Let's look at this. He said that FTX should relaunch after a token representing creditor claims, blah, 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 at least provide some value to creditors. True. I don't think anyone's going to use it, though. It is a good exchange from a UI perspective, but I think the reason that was maybe possible is because they were commingling funds. Wow. I wouldn't ape into this at all. I mean, you are actually approaching resistance if you want to get technical with it. So I wouldn't buy this at all. But I guess the reason it's pumped is because people are anticipating a relaunch or a recovery. I still wouldn't buy the token because the FTT token was relatively useless. It was more like a bet on Sam, right? The relaunch would probably cause a pump, but I don't know how that would affect the token. I highly doubt the new team would be shilling and pumping the token like Sam was incentivized to do because he had it as collateral for his Alameda stuff. Zane Tackett said that. All right, well, I think that's it for today because I'm going to stream tomorrow, so I'll keep you updated. We covered a lot. So we covered CPI, we covered Shanghai, and we covered the Hong Kong stuff as well. I just want to remind you quickly that the giveaway for the Man City tickets and then subsequently the giveaway for the Maldives holiday is occurring in a few days. So I'll be doing the giveaway on this show. So if you want the giveaway and you've been trading and building up your raffle tickets, I'm going to be the one giving it away. If you haven't joined already, I just want to remind you that if you use the link in the description, you can join the giveaway and set yourself up for potentially $5,000, $7,500 the next week, and then $50,000 next month. And the way you get tickets is, well, you can trade $1 and get your ticket, or you can trade more. So every 10K in cumulative trading volume, including derivatives and spot volume, will get you another 10 tokens to build up to your 31 max level. So it depends what you want to do. I wouldn't trade stupidly. I'd still trade with caution and I would still implement risk management. But if you are a trader, then it just makes a lot of sense right now to trade on OKX because one, it's a very good trading experience, but two, you're also working towards some pretty big prizes. So that will be on my show. Miles Top Entertainer, Miles to the Moon. Go watch it, 𝗟𝗏𝗿𝗄𝗽. I feel like today's pretty alpha packed. You got your update on CPI and your macro update, as well as my thoughts on ETH Shanghai, the LSDs I'm looking at, and the impact of LSDs and Shanghai on the market, and then also my thesis on Asia. To be honest, could have been 3 different videos. Do you guys prefer one long stream or 3 10-minute videos? That's really the question here, because I don't even know if the title makes sense considering we talked about so much. I need to just make separate videos, I think. But thanks everyone for watching. Link in the description to OKX if you want to take part in the exclusive giveaway. And we also have descriptions to KyberSwap for your spot trading, Apex for your DEX trading. So everything is there. And in the next video, we will probably just be a market update tomorrow. But I'm sure we'll get some massive movements from Ethereum now that Shanghai's over and people can begin to speculate on the next big trend. So let's keep our eye on what that could be. And tomorrow I'll keep you updated. All right. I'll see you in the next one. Have a lovely day. Peace out.